they think trading's difficult, or they're finally convinced that trading's actually quite difficult. Well, therefore I need to develop a complicated approach, because simple's not going to work. It's difficult. So.
And every single person or every single trader that I've met that has been successful has had a simple plan.
Perfect. Well, then I suppose that leads into the question, is trading easy?
You know, I think yes and no. It depends on, one of the things that people don't like to hear is a lot of it's your own personality, it's discipline, it's how you approach the market. A lot of it's money management. You know, if you've got, and we were talking about this situation earlier where I was testing a mechanical robot, and when everybody else in the world was short, the robot was long. And the defies all logic. Now, if you were the type of person who had bought a system that you don't understand, or you bought something that you really don't understand and it goes against what you're thinking, how long would you stay in there, in that trade? And also another thing that's very important is that there's a huge difference for traders, and I think you mentioned, we were talking about earlier, Stuart, trading is not always what people think it is, because real traders or traders have to pay the rent. They have to pay the bonds, the mortgages, they've got to pay the cars, they've got to do, you know, that's a different type of stress than somebody who is playing at trading or using a demo account, or they don't make the living, they don't pay their way with trading. And that has an entirely different stress factor when you might be sitting on $4,000 at the end of the month, you need $5,000 to make ends meet, and the trade that you're in right now is not working that well. There's a lot of different pressures that run through your head. So, and also to be consistent as a trader, trades tend to be skewed. In other words, not every trade is a perfect trade. So when you enter a trade, you might have 3 or 4 trades that are reasonably successful and one really good winner. And part of the evolution as a trader is to know when to stay in that trade. Because people have, I think, more of a fear of loss than they do of success. So when they're in a trade and they're up a few $1,000s or points or pips or whatever they're trading, the temptation is always to close the trade and take the profit. When sometimes it's the exact opposite. What you should do is you should let that trade run. And that also takes time to develop and learn, I think.
That's funny. Stuart and I have talked about this at great length. The steps that it takes to become a successful trader really are counterintuitive. I know you've got some thoughts on that as well.
Well, no, just what he just said then is intuitive. The intuitive thing to do is cut a profit because you see the money on the table and you want to take it. And of course the counterintuitive thing to do is to let that profit run and see how far it takes you, because it may just be that one trade that makes your next 3 months, for example. And it's the counterintuitive thing to do. And that's what it all comes back to, following that methodology and being disciplined and following that plan.
Yeah.
So,
and if you, just on that point, if you think of people who are particularly trend followers or trend traders, the market doesn't trend that much. In other words, the market may only trend 30% of the time, and the other 70% of the time it's in consolidation or on the side, as I used to say in the very old days. And so if you were purely trend following, you're going to be wrong more than you're right. Now, it takes a certain type of mindset to know absolutely that you're wrong most of the time and continue. You know, it's good in theory, but the practicality is that when you see your bank account going down more than it goes up, and when it goes up, you have to know to stay in there.
Yeah. That's one of the things I think when I do system analysis and I'm looking at the metrics after I've done some back testing of the system, one of the things that I do really like to look for and have an understanding of is the number of string of losses together. So that way I know, you know, otherwise you might be trading a system, you've got 6 losses in a row, you're pulling your hair out thinking, oh, this system isn't going to work and throwing the towel. But if you've done your back testing, you might know, historically speaking, it's had 12 losses in a row and it's still a very profitable trading system. Do you have any other metrics when you're analysing a system that you like to look for what metrics or things do you like to look for in a system that make you think, yep, that's a system I'd be interested in trading?
That I can trade it is one, and live with it is what I tend to do is, more recently I've started to get involved with back tests, and one of the reasons that I wasn't overly keen on back tests is because I really don't understand how to do it half the time, because a lot of the software that you have nowadays I never grew up with, so I don't know how to write a program to do a back test. So for me, a back test involves maybe a week's work going through a thing manually. I'm sure if I really thought about it, I could learn, but I just can't be bothered at this stage in the game to learn how to program a back test. So if I get really excited about something, I'll either trust the information that I've been given or do things manually. But for me, the real test is I have different sizes of accounts. So for example, now you have so much leverage in Forex. If I'm going to test the Forex market, I'll take something that makes sense to me and just trade it on a very small scale. And then if it makes sense, then I'll get excited about it and I'll go back and have a look at how did it perform in real trading? How did it fit into my lifestyle? How did it fit into how I like to trade? And if all of those things work, then I'll move it up to a bigger account. But it might take 6 months to a year before I become really comfortable with something.
How about you, Stu? Is there stuff that you like to look for?
Average profit versus average loss.
Yeah.
That's probably the big one, because that almost overrides the win-loss ratio. As Mark said, you can have that 30%, 70%, but it's the average profit and average loss that's really the key, I think.
I've got a few other questions I might scoot through as well. Interested to find out what are some buy triggers that you look for. Like, obviously there are hundreds of different ways to get into a trade. What are some things that you like to see for you to want to get into a trade?
Well, I think it's, and it goes back to the earlier question now, I'm much more comfortable in longer time periods. And one of my students and a chap I've been talking to lately is a very good trader, but he trades a 5 minute, he trades very small time frames, and he's burning out. I think it's very hard to trade a live account on a small time frame for more than 6 months,
absolutely,
or maybe even 3 months without a break. But at some stage you go a bit crazy. You do go a bit crazy. And I was never. It wasn't until later on I became successful in smaller time frames. But I sort of went from 5 minutes to 30 minutes to an hour to 4 hours, and I became very comfortable at 4 hours. And then I've recently, I say over the last year or two, become very comfortable on daily charts. And I think also because now I'm more comfortable with much larger stops. But what gets me into a trade? And also that evolution is I don't rely so much on indicators anymore. It's a lot more on price actions. So if, for example, there is a 2-bar reversal or a reversal or a particular formation of bars at a particular juncture in that trend, then that gets me into a trade. I keep a record of every time a particular formation and how successful it was. And also I'm very choosy. I mean, one of the other problems I see with new traders is they feel a compulsion to trade every day. And the market just doesn't always give you a trade. There might be something happening, the market's dead, there's no volume in the market, there's often a reason you can't trade. So I'm over the compulsion now of not trading. If I don't only trade once a week or once a month or however often, but that one trade is perfect in every way. And one of the things I found that helped me, and I think would help everybody who trades, is when you see that perfect trade or you have that perfect trade, print it out. I used to have a library of trades, so whenever I was taking a particular formation, let's say it was a double bottom, for example, a breakout of a double bottom, or a retest would be a better, as much higher probability trade, I'd flick through 10 or 15 previous ones I printed out just to remind myself what that should look at, because
that's great.
in the hard right edge it doesn't look like it does a week later, because you can't always see it. So and that's saved me many times, just to say, okay, that doesn't look quite good. And so number one is it has to have a particular formation. It has to line up just the right way, just the right time, and it must look a certain way for a high probability trade, and that gets me into the trade.